All right, we're hitting that stat from the Stock Traders Almanac, 2% gain in November historically. Also, another stat we got from Truist, if the S&P is up 15% or more in the first 10 months of the year, has about a 5% gain in November and December. Is the trend our friend? Do you believe that the historical precedents are set up to repeat themselves once again this year?
Yeah, there's no doubt that this year's been a good year for stock market returns. Like as we go into the end of the year, we've got lower US dollar, we've got lower yields, we've got lower energy prices, and as companies report earnings, we're seeing very good productivity improvements coming through individually. So we think we're in a mount-up environment as we sit today.
Yeah, earnings certainly have been strong, better than expected, kind of holding up to the same levels we saw in the other quarters this year. Any questions about any possible, I guess, pitfalls in earnings? Obviously, we have NVIDIA coming up, which is like the kind of the crown jewel in the earnings season. Any other points of this earnings season that are you at all concerned about? After the bell today, by the way, we get Palantir and AMD.
Yeah, we think that last week we had some key breakthroughs with some key narratives coming through. So what we're seeing is we're seeing the emergence of an AI flywheel. So what that means is that as you see lower compute come to market, we're seeing new AI applications built on top of that, which is attracting more capital into the market, which is then meaning more lower AI compute coming to market. So this AI flywheel is starting to really operate in a meaningful way, which is why we saw a number of hyperscalers report significant increases in CapEx last week. And so now, as we look forward over the next 12, 18 months, knowing that this is what is the framework we're working with, there's a number of bottlenecks appearing across the global economy, which we think make fantastic opportunities for investors.
Yeah, by the way, flywheel is your word of the day. I want to get to your pick in just a second, but I want to talk to you about something else. So you're mentioning something that's obviously true. AI powered the market all year long and certainly in the month of October. But you look at some other trades. Is it concerning that there's so much concentration in tech? If you look at the equal weight, it's underperforming. You look at momentum, it's underperforming. If you look at what some people call quality dividend-paying stocks, they're underperforming. Is this a concerning trend that so much of the action's in the AI trade?
There's no doubt we're seeing pockets of excesses in certain areas. We're really focusing on those where the fundamentals are keeping up with the stock prices. There is momentum that is building in certain areas of the market, particularly around quantum computing, some of the other lower quality areas of the market. However, if these companies continue to deliver and execute on quantum promise, then there is significant upside, over the time period.
Very quickly. So your pick for us is Brookfield Renewable Partners, kind of playing off the need for energy for quantum and everything else. Give us the elevator pitch very quickly, then we got to go.
Look, Brookfield has really missed out on the AI trade in the last 2 years. It's on about a 5% dividend yield. If you look at its underlying infrastructure footprint, it's got hydro, solar, it's got wind, but it really doesn't benefited from the AI trade so far. And inside Brookfield Renewable Infrastructure is a very large stake in Westinghouse Electric.